Welcome to Noel Jones' first quarterly rental market wrap, a space where we will look at the highlights of the past 3 months as well as exploring what the market may deliver across the remainder of 2022. The resurgence of Melbourne's rental market continued across the September quarter with further improvements to rental yields, vacancy rates and the median rental price of both houses and units.
After 8 consecutive monthly drops, September saw Melbourne's vacancy rate steady. Currently remains at 1.3%, the lowest point since March 2019. The municipalities of Knox and Maroondah recorded some of the lowest vacancy rates across Melbourne, with results of 0.4% and 0.5% respectively. This should be reassuring for investors looking to expand their rental portfolios in these areas. The Financial Review recently reported that seasoned residential rental providers are now taking advantage of the low in the market to add additional properties to their portfolios. This may contribute to the balancing of supply and demand in the rental marketplace.
Domain figures report that house rents have been pushed to an average of $470 per week, a new record high courtesy of the tight rental conditions Melbourne is experiencing. This reflects an increase seen each quarter for the past year, something that has not been seen since 2007. Unit rental prices are currently $5 less than they were in pre-pandemic times, resting at $425 per week. However, Domain believes they will set a record high next quarter based on the pace they have been rising at. When looking at rental increases, it's pleasing to see that Noel Jones Group has also achieved some excellent results, with all of our office core suburbs experiencing either growth or stability across the 12-month period.
Rental yield is the difference between the income you receive from renting out a property minus the overall cost of your investment. It's often expressed as a percentage, and the higher the percentage, the higher the return on investment. Buying a property for less and then charging a premium rent will contribute to an increased yield, but this isn't always the reality, so it's important to understand the things that renters place value in when looking to invest. A form of cooling, indoor spaces that are clean, neutral and flexible, and usable outdoor spaces are amongst the things that renters are willing to pay more for. Also, having access to amenities including public transport, shopping precincts, schools, parklands and cafes rate highly with renters, although priorities will vary based on individual needs.
The COVID pandemic drove many renters out of capital cities, and Melbourne was certainly no exception. The return of international students combined with record rents for stand-alone houses is likely to see demand continue to increase for inner city apartments. No doubt welcome news for owners of those properties. Melbourne is still seeing rental demand outstrip supply. However, many capital cities are seeing stabilization in this regard, so there is potential that Melbourne's market will soon align, and increasing investor confidence will certainly contribute to this. If you are a renter, a rental provider, or you are considering buying your first investment, we would be happy to help. Contact your local Noel Jones office or visit our website at noeljones.com.au.